clear as to whether they are write-off past due accounts. The account has grown by 68% over the past year, jumping from $3.6 billion to over $11.5 billion. Writing off bad debts is an important process for this account, but it has to be done correctly. Now signing off to Trey Nichols.
Just as a recap regarding Merck's sales and customer service activities, a sale can only be triggered once the pharmaceuticals receive FDA approval. Before the sale is approved through the master vendor, an ordering inventory must be approved by the master vendor list. The list is truly control like no other. Merck then runs inventory check by matching the sales invoice to its actual inventory on hand. Before a shipment is done, the accounts receivable ledger is then updated for the payment by reducing the vendor's account by the appropriate amount and updating the account receivable record by debiting cash and crediting accounts receivable. Merck makes estimates of bad debt expense based on historical records and aging schedule of receivables. The uncollectible account is written off by authorizing it through the accounting department by updating its receivables ledger. In an unfortunate event there is a return, the returns are serviced by recovering a credit memo and sales invoice to prove the merchandise is received. A debit to sales and a credit to accounts receivables are made. And now back to Merck in the studio.
After the break, we're going old school and playing fact or fiction on internal threat analysis and residual risks.
I know what's been troubling you. Listen to me.
Only through me can you achieve a power greater than any Jedi.
I can feel your anger. It makes you stronger.
Rated PG-13.
Welcome back to the SOC Center for a little segment we like to call Fact or Fiction. Fact or Fiction. Merck's internal controls reduce the potential threat of defective products to the low likelihood, high magnitude of risk outcome on the residual risk map.
That's fact. Merck products have to go through extensive FDA approval procedures before even reaching the market. The only risk which would lead to defective products would occur during the manufacturing process. Merck has extensive and ongoing training procedures for its labor force, as well as state-of-the-art equipment and production processes. The problem, though, is that if defective products are shipped, the magnitude of the outcome would be very costly due to litigation costs. For instance, in 2007, Merck faced legal issues with their drug Vioxx and had to pay a $4.85 billion lawsuit.
Another question. Fact or fiction? Merck's internal controls eliminate the potential threat of excessive credit risk entirely.
That's fiction. There's no possible way that Merck would be able to collect all of its outstanding accounts, though they do have sufficient controls, such as pre-approved bad vendor lists and the reminder calendar, which the accounts receivable department utilizes. Although the reminder calendars are used, I still have my doubts about whether they are properly reducing their bad debt at the specified time. The receivables account grew by 68% from 2007 to 2008, compared to 9% from 2006 to 2007. For these reasons, Merck controls move this risk to the medium likelihood, medium magnitude on the risk map.
Last question. Fact or fiction? Controls to mediate inferior vendors reduce this risk to low likelihood and medium magnitude.
That's an easy one. That would be fact. There are thorough checks which are done to make sure that each vendor has a solid reputation. Furthermore, the company constantly maintains the record of approved vendors by evaluating them based on research conducted by Merck. This is primarily based on historical records, such as market share of a product line, inventory turnover, and the sales account. Sales decreased from 2007, when it was $24.2 billion, to $23.85 billion in 2008, which could mean that it is more selective of the vendors to which it conducts business.
Thank you very much, Francisco. Well, this has been another edition of Fact or Fiction. Let's send it back to you guys.
What's this? I think I'm getting some breaking news. Yes, Reuters is reporting that the accounts receivable tests have been figured out for the Merck Audit engagement. What I'm being told from the newsroom is that the tests are as follows, and I'm reading these clearly. Obtain a complete list of accounts receivable from the accounting department and trace amounts back to the total given. Second, confirm accounts receivable and follow up on exceptions and non-responses. Third, determine which accounts should not be included in the account due to improper cutoff by date or invoice reconciliation period. This can be done by vouching transactions prior to and after the fiscal year end and determine if they have been recorded in the proper period. Fourth, test the accuracy of the age trial balance. Fifth, reconcile the total per the age trial balance with the receivable balance per the general ledger. Sixth, select the sample of accounts in the age trial balance and test the aging by examining the appropriate supporting documentation. 7. Test the accuracy of supporting documentation to ensure that it is accurate and priced properly. 8. Reconcile the activity per the sales journal, cash receipts journal, and postings to the accounts receivable subsidiary ledger with the recorded activity in the general ledger receivables account. And lastly, review the Board of Directors minutes, bank confirmations, attorney letters, and other correspondence to identify receivables that have been factored. As always, we will keep you posted on late-breaking news right here on Channel 4 News. Back to you guys.
We've seen a lot today. What are your final thoughts on Merck here?
Well, Francisco, unqualified opinions are won in the controls and the trenches. Reconciliations, verifications, and proper training. Merck's got all of these things and more. I'm going for an unqualified opinion.
That's great, that's great. I say at this point, with prelims complete and all, there's no indication of misstatement. Fluctuations in accounts could be attributed to our current ITAs. Looks like we've got a regular TMOC company here.
Well, we're out of time, guys, but remember, SOC Center is online 24/7 at soccenter.com. Good night, everybody.